now we can see the real drain behind the scenes taking effect on the COMEX, and how real demand for the silver, which is one of the reasons why the price has spiked today, is incredibly high.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome to December, everyone, and especially with December deliveries on COMEX now underway. A lot of interest in that, plus a darn big move in the silver price today, which we will cover and get to with my guest, Kirian van Hest. Kirian, I would say we might have had more requests for you than anybody else, especially after your Palisades interview. So we'll be excited to dig into the COMEX today. Although, real quick before we get started, I have a quick word from our sponsor, which today is Cancellation Gold, who you saw on the show a couple weeks ago. They actually had some results out. Cancellation Gold intercepts 1.78 grams per ton over 32 meters, 3.71 grams per ton over 11.35 meters. And we'll have a link to the end if you'd like to find out more about them. Margot Rock was on the show a couple weeks ago. So with that said, Kirian, you got all the answers for us today, I hear. So I'm excited to dig in. It's nice to have you on here from the Netherlands calling in, where I spent a year, a couple of years back. How's everything going with you today?
I'm doing great, and I'm very excited to be on. I wanted to be on earlier, and you invited me for Silverfest, but unfortunately I spent that weekend groaning in pain because my stomach gave out just because of stress. So I'm back here, I'm on here now, and I'm ready to present my case on the shadow contract.
Cool. Well, I guess, sorry to hear you weren't feeling well that weekend. Sometimes the life of a silver investor can be a little bit stressful. I know when we woke up yesterday on Monday, people were feeling the stress, although quite an interesting day here today. You see gold up, silver up $1.24. Gold rallying as well, back over 1800, 36.80. We also did get those COMEX deliveries, which looked a little smaller than expected. So anyway, why don't you take it from there and let folks know what's going on?
Yeah, the COMEX deliveries was much smaller, and we'll get to the COMEX deliveries of this month and how they weren't just much more than expected, but incredibly much smaller. But we'll get to that. I'll start the screen share, and we'll get into a hot topic, namely the difference between eligible and registered gold, because that seems to be a topic of confusion at times. Now, COMEX's balance sheet, I'll save all the technical explanations of the terms and such, since this is a hardcore silver channel, so I'll be getting directly into it. The gold and silver on COMEX's balance sheet is split into two categories, namely eligible and registered. And why do they do this? That's because only one of those categories is actually backing the contracts on the COMEX, and that would be eligible. Now, the screenshot you're looking at comes from a document that they released and starts our story on April 20th this year, when they performed a discount of their inventory at the height of the panic, which was basically a statement of back off or we're going to have problems. And we'll get to that in a moment. But in here, I've highlighted the important parts, namely that eligible gold is gold that is acceptable for delivery against the contract, i.e. which meets specifications and approved brands of the contract, for which a warrant has not been issued. Registered gold is eligible gold for which a warrant has been issued. Very clear language, can be no mistake. In this case, for registered, it is all about the warrant. So the numbers on the balance sheet don't even enter into it. It's what these warrants are. Now, I have been looking into the rule book of the COMEX, which you see here, link included, by the way. And I've highlighted the important parts as well, because I have a theory that I am unable to prove because I can't see the specific language of the warrant. I've never seen one. But from the rule book, it seems to indicate that you cannot declare force majeure on a warrant. What's important here is contract law. Force majeure is a clause in a contract. And as we all know, we're not trading futures, we're trading future contracts. Warrants are another form of contract. And in their rule book, it actually specifies under which rules of electronic document and everything it falls of the United States Trading Code. So the important parts here are 5, 7, and the conclusion. The first, a warrant shall be of unlimited duration and remain valid until canceled by the facility that issued it. Basically, it's like a dollar. Like nobody can cancel a dollar. You just have one and you can pay with it. This thing, you just have a warrant and you can collect gold for it. It's basically a gold standard, if you will. The second part is important is, the facility shall be solely responsible for ensuring that no duplicate warrants are issued, printed, or released by it. So unlike the over-leveraged COMEX, the futures, of which we know there isn't enough metal backing it, these warrants are fully backed because it's not the COMEX that's responsible for them, it's the facilities that are responsible for them. And they are responsible for not issuing any duplicates. 105B, procedure for the cancellation of warrants, it clearly states, a warrant may be canceled only by the facility that issued it and only upon endorsement from the clearing member to such facility in accordance with these rules. A clearing member in this case would probably be a bullion bank who acts on behalf of a client. So rich guy calls JP Morgan, get me a bar. JP Morgan holds the warrant for them in their account, just like you have money with the bank in the bank's account. So from this language, not knowing the exact language of the contract itself, which is vital, I suspect that the reason why registered gold is still on the balance sheet of the COMEX is because it's completely safe. It is not the COMEX's gold. They don't hold the title. They have no say over the warrants. They can't cancel the warrants per their own rules. And the only way they can even touch warranted gold is if it falls under a performance bond. Well, when it's they take warrants as collateral as well as treasuries, cash, and whatever to satisfy cash balances with the account. But otherwise, they can't touch it. The only thing they can touch is eligible. And then we get back to the document that they released in April of this year, where you can clearly see that it's their document because it has their links and everything in it. And I've highlighted again the important part. While surveys conducted indicated no clear consensus as to how much gold is dedicated to long-term investments, the exchange, in effort to represent a conservative deliverable supply that may be readily available for delivery, made a determination at this time to discount from his estimate of deliverable supply 50% of its reported eligible gold at this time. The exchange may, at a later date, determine not to discount such stock or to recognize a discount level that is more or less than 50% of reported eligible gold when calculating deliverable supply estimates. So let's break this whole almost legalese section down. While surveys conducted indicated no clear consensus as to how much gold is dedicated to long-term investments, which means they don't know, they have no idea how much gold is actually locked up for long-term investments. They literally said there's no clear consensus. So
hard to see why you would expect the exchange to have any clue about that.
Yeah, They literally say they have no clue. So to continue, in an effort to represent I question conservative, but fine. Made a determination at this time to discount from its estimate of deliverable supply 50% of its reportable eligible at this time. Now that's weird. There's two at this times in that sentence. Well, it's very clear why there are two of them there. One of them is at this moment, we're discounting 50% of eligible supply. Basically, we have about half the gold we thought we have available for delivery. Second, at this time, applies to at that moment. So they might rethink the amount of deliverable supply they have later. Again. And at the last sentence, they say, the exchange may at a later date determine not to discount such stock, which is basically just a piece of bait. Like, sure, we have about half the gold that we think we have, but you know what? Later, we might actually have the gold we think we have. Or we might not, and it might actually be less than 50% that we have, which is the last sentence. So, yeah.
Kirian?
Yeah?
Is there any truth to the rumor that they have Fort Knox do the audit for this whole scheme?
If they did, there would still be irregularities, because I read an article by Jan Nieuwenhuis in December of 2019, where he described that a federal gold auditor was caught lying, and that there's irregularities with the seals that are supposed to seal up the gold bars in Fort Knox, and that we have indeed no clue how much gold is actually still in those vaults. We don't actually know. So never mind the COMEX. If you want to get into that rabbit hole, well, I've burned down enough this year. Let's just stay away from it, please.
We can stay away from there for now, although I'll just amuse myself giggling at imagining Fort Knox and the COMEX. It's like, bidding war for the executives there, where it's like, wow, these guys have less transparency. We got to get him to run it. So anyway, I'll let you keep going, but it just all quite silly.
Well, when they finally audit the COMEX, because we desperately need to know how much gold there actually is, there's a good chance that they're going to ask the question, how much is in Fort Knox next? So let's continue and get into the shadow contracts. Now, what is a shadow contract? Now, for that, I have this screenshot. A shadow contract is a contract that is a futures contract made on the COMEX, slated for next day delivery or same month delivery. Because we have no insight to the movement of these contracts other than the very limited data that COMEX gives us, we don't actually know which contract delivers when. However, to support my definition of next day delivery, we have here the final trading days of July 29th and July 30th in, I believe, silver or gold, doesn't really matter. Point of the matter is that in deliveries, there is clearly 459, and in open interest change, there is 230. As you can see by the calculation done for you, that is a discrepancy of 229 contracts. If you were to deliver a contract, you would assume that the contract were to disappear, because the contract itself is useless, because you've delivered the bar. That's logical, and you can see on the last day of the month, all the contracts deliver, the open interest changes with the exact amount of contracts that deliver, and it's done. So the fact that there are an additional 229 contracts in open interest change the day before the final day of delivery, and those contracts indeed deliver on the final day, we can definitely state that a shadow contract is a futures contract made in the same in the delivery month, the current delivery month, slated for at the minimum next day delivery, because that is what you're looking at. Now, let's get into when I found these things. If you want a detailed description of all of this, my shadow contracts article on my website, DesoGames.com, is 43,000 words. So if you want in depth, that's where you'll find it. So we'll just get into when I found them for the first time myself. So you can basically discover the story as I did. So I added this screenshot in because it adds context. This was made on June 1st. This was the situation in America in June 2020 that all of this started happening in. Basically, the George Floyd protests had just begun, and I'm Dutch, so I don't care about American politics. Let me just say that up front. It's just that for market risk, it's important. And you can clearly see at that point, the dollar was sliding, as it was today, because the Dixie took a dive for the dollar index. And, well, stores were being looted. And that was on the 1st. So with that in mind, we go to the 2nd. Oh, no, the 1st of June still. That's the same day as all of that was happening. But it happened more later as well. This is when I noticed it. I drew a big red box around those deliveries because it was during the time of the massive deliveries and I want to point attention to it. However, if you look closely at the numbers, you'll see that 6,000 is not 7,000. So when I saw that, I thought, you know what, that's not right. Those numbers are supposed to line up, shouldn't they? Because I have been looking at the COMEX before, even though it wasn't every single day. So I have seen additional contracts in the same day delivery month before. Well, somebody brought it to my attention. But after June, the situation completely changed. So before they may have been random, afterwards there's a pattern, and I will show that today and talk extensively about it. But this is when I noticed them for the first time. So the next screenshot is from the next 2 days, June 2nd and June 3rd, in gold, by the way, where you can clearly see, and I'll even enlarge it a little bit, where there's still a discrepancy on the 2nd of about 277. And I thought, well, 2 incidents does not a pattern make. It was still weird. It could have been a glitch. But then the 3rd of June happened and the open interest change was positive. And after this happened after the COMEX already discounted 50% of eligible in April, and the COMEX and the LBMA released their dual memos of don't worry, don't panic, everything's fine. So we were in the middle of lockdowns, or we just had them, and everybody knows the the virus, this shall not be named situation. So there was a massive supply crunch. There was the whole arbitrage thing and the premiums getting out of hand. No metal available because, well, supply was just very tight. So why, in God's name, in that context, in that situation, would somebody add more than 1,500 contracts, like almost 1,600 contracts, worth, mind you, what is that, 1.6 million ounces of gold in additional contracts? Because the change is positive. That means that in order to calculate the amount of contracts added that day, you need to add deliveries to the change instead of subtracting the change from the deliveries. So that's over 1,500. So that blew my mind. And at that point, I decided basically for myself, there are shenanigans happening here. I may not know enough, and I may not know exactly what's happening here, but I do know that this shouldn't be happening. Now, I've got a legion of screenshots of June happening, of shadow contracts happening in June. So it happened throughout the month, even though I didn't check every day. But I did check the entire week after this. And that's the next screenshot I'll show you. If if this damn thing will work. There we go. I'll zoom in. So this is June 1st to June 5th, that entire week. And rather than go through every day, I'll just show you the summary I made here at the top. And that is the difference between open interest at the start of the week and at the close of the week with the amount of deliveries made means that during this 1 week in June, during the massive deliveries, after the day where something like 32,000 contracts were delivered in a day, they added, it's 348K. I was off by an order of magnitude, but whatever. They added 3,480 contracts worth 384,000 ounces of gold just in this 1 week. So that sent off all kind of alarm bells from me, because in that kind of situation, in world context, if you will, this shouldn't be happening. I know how this could be explained. The COMEX works not just as a price buffer, but as a supply buffer as well. So if there's not enough supply, they'll just start delivering bars from inventory. So that is basically what is happening here, the delivering bars from inventory. And that's fine if there is like a temporary supply problem. Like if a mine can't deliver what it's promised and they call up and they deliver from inventory and then they deliver it into inventory. That's why it's there. Fine. But the fact that this keeps happening every day and happened throughout June Gold to the tune of, I didn't even keep track, but clearly thousands and thousands of ounces. In this case, since there's a global supply problem, the price should go up. It's simple supply and demand. There's not enough supply and too much demand, so the price should go up. And it's not, because they're using the buffer to suppress it. And meanwhile, everybody who's getting these deliveries is going to end up rich, because they end all these deliveries, all this big number, those 7,000 you see here, all of those have warrants issued against them. So the title has changed. So they're all owned by whoever bought them. Now, this was happening in gold, but I started to form a theory as the month went on. I started to see that this was happening according to a pattern because of the times we were living in. I figured that they were draining the COMEX because they were because somebody behind the scenes, I don't know who, but I suspect JP Morgan, because when is it not JP Morgan, basically saw the data that we don't have access to. They saw how the contracts over the year had shifted into accounts that were no longer trading it. And somebody on Twitter actually expressed it beautifully today. They said, so the liquidity is gone about the December deliveries. That's basically what's happening here. That started happening in June. The liquidity of the COMEX was being drained behind the scenes, basically due to contracts shifting into traders holding long positions. People, if you are in the market and you're actually trading it, you maybe not know who is, but you get a sense for who the big players are. So if the big players move all their contracts into cold storage and are basically like, okay, well, maybe we can't take delivery in April or the thing blows up. But if we just wait out the delivery issues and then take delivery, we can still get our stuff before the thing blows up. So that is what's been happening. Basically, as I write in my article, the COMEX is like a giant Mexican standoff. Everyone knows it's over-levered. And the people who claim it's not are just crazy at this point. But nobody benefits from the entire system collapsing, because gold will go through the roof and not a single person in society benefits from gold going through the roof. Those who have been stacking it will increase their wealth, sure. But the general living standard will drop so much that it's kind of a Pyrrhic victory. You know, it's you win, but you still lose.
Well, Kirian, can I ask a question on that one?
Of course.
I know there's a lot of people who see it that way, but I mean, look at how a lot of people are living under the current dollar system. I mean, geez, if we had any sort of sound money and so much of the wealth wasn't being stolen to build tanks and God knows what else these guys waste all of it on. So just a thought there. I guess
Oh,
we'll
of
see
course.
how it plays out, although I don't think people have to be like fearful of this. I mean, I don't know. I see it as a great opportunity, but
I would oppose that view by saying that that the United States went off the gold standard to begin with because of government overspending. While sound money is very much needed for a healthy global trade, and global trade can only grow with a stable currency, and I completely agree with you on this. Sound money alone isn't the answer. As long as you have got incompetent people in government, they'll just spend too much and devalue how much gold is backed with the currency units, just like they did behind the scenes. And that's why they had to drop off the gold standard in 1971. It's because when they exited the war, I thought the dollar was still about 20% backed by gold, while when they dropped the gold standard, it was down to 8% per dollar. And that's the reason why they had to drop it, because people started getting nervous. So the massive inflation that happened afterwards was basically just a result of years and years and years of unsound fiscal policy. So I don't see the massive inflation and the rise of the dollar in the 80s as the leaving of the gold standard. I see it only as a consequence of acting like a bunch of idiots under the gold standard. So inflation in physical currency goes back to the Roman Empire. You just need good government. I'm sorry, I thought about this a long time. There's no way around it. If you got idiots in charge, they make stupid decisions.
I think that's the oxymoron, good government. I mean, we've seen for a couple thousand years now. I completely agree that, I mean, I watched a documentary on Roman Empire a year or two ago, and I was like, wow, you can just insert the names. That one looks like Obama, and this one looks like Geithner.
Yeah.
So that's the thing. I think that's the nature of government. You give people the power to tell us what to do and to take their money. They're going to do it.
Yeah.
Which is why
I absolutely agree, but I will not claim to be smart enough to be able to solve the government problem. I do agree that
I'm on
money,
that one though. I've been preparing an Austrian free market platform for 2024. Just dissolve all these unconstitutional things. I mean, it'd actually be pretty easy to fix, in my opinion. But
just not be an idiot. It's really simple. Just not be an idiot. But just how do you convince all the other idiots to not vote for the idiot? That's the problem. But anyway, as I said, I formed a theory that they were manipulating the price down and draining the COMEX because of this rush. Because the longer these delivery walls went on, the more likely it was going to all blow. So I figured I was watching silver as well, since this is a silver channel. And it wasn't happening in silver. Not a single shadow contract in June silver. So I thought, they're securing the important asset first. They're going for the gold first because they're not sure if it'll blow tomorrow, because if it does, they want the gold. But they will come for the silver because silver is money, no matter what everybody says. It may be industrial now, but it will be money later. Like I love to say, they may go out of focus, but they never go out of style. So I thought, if my theory is right, then they must happen in the July silver delivery wall, just like it happened in gold. So I started taking actual screenshots of silver early, and it turns out that I was right. These are all the all the days of July delivery in silver. And the numbers are a bit small, so I'll zoom in and we'll go through it as I discovered them. So on the first day, 16,834 contracts were slated for delivery, which is like 80 million ounces of silver. Oh no, 53 million. It's a lot of millions. So on the first day, the massive contracts delivers, and this number we'll get back to later as well. And you can see that the open interest change is higher than the deliveries, as you would expect. Some contracts still roll over in the delivery month to the next one. This is the normal situation. Back in February, before everything blew up, the normal situation was 0 deliveries until the last day of the month when they had to deliver, and the excess just got delivered. In February, it was like 270 contracts, so very low. So the fact that everything gets delivered on the first day is the new situation. So on the first 6 days, or 7 days, 8 days even, maybe, you can see there were no shadow contracts. There were the open interest change is constantly below deliveries. But on the 9th, I was right. And they started appearing in silver as well. However, this time it was different, because in June, maybe they didn't start on the first day with the massive deliveries. They started on the second day and then the third, and it just ramped up immediately. But not in silver. First there were 12, and the next day they weren't. Then there were 7, and there were 7 less. So what's happening there? And I thought about it, and I thought, maybe the people behind the scenes think, because these are all mind games, that because they just added these massive amount of additional contracts, and I was a complete unknown, so they wouldn't have seen me, but they might have thought maybe somebody has noticed. So let's make it appear like a glitch. If you look at any of these days, just in a vacuum, if you go to the website one day, you see, that's plus 12. That's weird. So you go back the next day, minus 29. It's just a glitch. So it happens the next day, plus 7. It's just a glitch again. So at that point, you start ignoring the data, and they've already won. So that's what starts happening here. They slowly start, plus 12, plus 7, minus 7, minus 12, plus 2, but then they start happening more. From the 16th to the 21st, suddenly there's a shadow contract every day, but there's not that many of them. There's still the same amount as before. It's still in the same range, but now they're happening every day. And as I like to say, glitches happen either once, so it's a one-off, just confluence of instances, it just happens, and it never happens again, fine. Or they happen consistently, because a computer is a computer. If it runs bad code, it will run bad code happily all day long, and it will produce the same glitch time and time and time again. So if it happens, it should happen consistently. It's not happening consistently. First, there were none. Then there were few. Then there were consistently few. And then suddenly there were a lot of them. So if they add 217 contracts, and I'll just run a calculator here because people don't calculate enough these days, even though Windows just has one. So 217 times 5,000 ounces per contract, that's 1 million ounces. Just appears like that. And it happens more often. So if we just take these numbers, just add them up. And it gets to wild numbers, just these few days. So this is 924 times 5,000. This is 4.5 million of additional ounces during a supply crunch in July, of all places. So if you run those numbers for the entire month, you add up, you come to 6 million additional ounces. And then the pattern changes, because not only were there none, then there were few, consistently few. There were a lot, but then the next month, if you look at the pattern just from start to finish, the 195 on the first day of August contract delivery makes sense, because there were a lot the previous day, and COMEX only releases 5 days, so you keep seeing a 5-day window. You think, well, it's fine. It was glitchy yesterday. It's glitchy today. So what changed? Well, it's a new delivery month. And the last time in the delivery month, there were no shadow contracts in the first day. And now there are shadow contracts in the first day. So I kept making screenshots. So move into August, because the pattern just continues. It continues to change. So we move to the start of August. You can see it continues as the pattern was, a large amount of shadow contracts. Then there were almost none, but I suspect this is because August was a non-active month, so there wasn't a lot of open interest to begin with. So they had to slow down the amount. So the 5 contracts rolling over, fine. But then there were 25 more, all right, so maybe the pattern continues, but then there were 0, +4, +2, +3, 0, +1, +6. Absolutely middling numbers. Again, the pattern changes. If these things were there to begin with, where the hell did they go? You know, if a glitch is consistent, it's consistent. This is anything but consistent. Once you get this many changes, there's only one explanation for it, and that is intelligence. This is not a series of random events anymore. This is an invisible hand at work, hidden in the numbers that they display. And the only reason we're seeing these numbers is because if they want to get an extra bar out the back door through the buffer, then they need a contract for it, because the contract needs to deliver before you can get a warrant. So they need to go through the system that they've created. That's why it shows up in the open interest change, because they need to make a new contract, which goes into the system, which adds to the open interest change. So you get a plus number, like here on the August of 18th. They added 6 contracts, they delivered 2, so the open interest went up with 4. It's really as simple as that. And the reason why the shadow contracts suddenly disappear from mid-August is very simple. September. Because there was a giant silver September delivery wall coming that they were not certain they were going to make. Now, as we are in August, I will remind everybody that on July 27th, 2 days before the gold delivery wall in August, COMEX expanded their refinery list by, well, they basically tripled it. I thought it was triple for gold and double for silver, something like that. Ridiculous numbers in any case, as per the research that Ronan Manley has done over in Boolean Star. So they did that to make the August gold and September silver delivery wall. But even with those expanded refinery numbers, they could not make September unless they stopped making additional contracts. And that will become clear when I show you September, because as I said, I've been taking screenshots all year. And of course, this is all their own data. I have shown you nothing that the COMEX has not released themselves. So here's the September delivery wall, and it's off the bat notable that even though none of the economic situation improved, in fact, if anything, the V-shaped recovery narrative by September was already dying. So the fact that there were not 16,000 contracts, but 10,000 contracts delivering in the wall, and the shadow contract still had to disappear to make it happen, is very notable, because it indicates that they really do not have that much supply in the vaults at all. And it's corroborated by the first few days, because you can see minus 25 contracts, so some rolled over, plus 15, some were added, minus 101, they were removed, plus 105, they were added. So now I want to just take these two numbers here and point something out instead. We're dealing with futures here. This is a futures delivery market. It's supposed to be for the future. Why are future contracts added in the current delivery month to begin with? But why are there 100 basically added on September 2nd, or removed on September 2nd, and added back in on September 3rd? That's not a futures market. That's a spot delivery market. Basically, if they can't deliver, they roll over, and if you can deliver, they make new contracts and deliver immediately. Maybe it's not for the same day, for the next day, but still, those 105 contracts that were added on September 3rd were already gone by September 8th. So what was the point? You know, there is no point in adding those contracts. Why didn't they add those contracts not to September, but to October, the next month? Because the next month is in the future, and there wouldn't be such a rush to deliver it within the same month. And apparently they can't because they rolled them over anyway a couple of days later. So what the hell? Anyway, at the time, I already had a prediction out that as soon as the open interest was below 2,500, give or take, the silver price would be able to soar free and clear, because they would have made the September delivery wall, and there would have been basically no delivery walls until December, which is very convenient for them because that would give them several months to actually come up with the stuff. Now, I was right, but not in price. I was looking at the wrong place. I was right in shadow contracts, because when the open interest drops throughout September, you can see by about Monday, the 14th of September, the shadow contracts come back, and they come back with a vengeance. From that point onward, for the rest of the month, there's additional contracts added every day. Well, except for Friday the 25th. But considering the amount that of contracts that were added, you can be damn sure all of these, except 8, were delivered. So just counting the plus, so the number you see down here only counts all the plus numbers because the minus numbers rolled over to the next month. That is still an additional 14 and almost 14 million and a half ounces of additional contracts. Now, some of those contracts were rolled over after they were made, sure, but then still, why were they made in the first place? Why? There's no reason for them if they rolled over afterwards. So I just counted all the additional contracts, and it comes to quite a number. But I'm not done, because September was the last active month. COMEX is split into two types of months: active months, where you can take delivery, and non-active months, where there's usually no open interest. Now, October, November are both non-active months to prepare for the active month of December. So it is quite striking that over the month of October, there were still an additional 3 million ounces delivered. Only now we can see the real drain behind the scenes taking effect on the COMEX, and how real demand for the silver, which is one of the reasons why the price has spiked today, is incredibly high, because every day you see here, every single day after the first day of deliveries has additional contracts added. That means after that first day, not a single person on COMEX elected to roll over their contract to the next month. If you count all these numbers on the delivery column, you add them all up, and you add up all the plus signs, all the shadow contracts, then the amount of shadow contracts is 588. And the difference in deliveries versus the amount of delivery standing on the first day, so the at close number on the 29th compared to the number of all the deliveries added up that actually took place in the month, you get a difference of 576. So I can guarantee, prove to you from their own data, that during the non-active month of October, 2,888,000 ounces of silver were additionally delivered. So if there isn't some sort of massive supply, massive demand, as well as a supply issue, because otherwise this need not come out of the buffer, why would this be happening? So with that, we have 1 month left in the silver story, and that is the month that just finished, November. And here we come to the final part of the pattern, which I predicted would end in December. And you can basically see it. You can basically just see it happening. The 29th was the last day of rollover. So 444 contracts stood for delivery on the first day of delivery. And at the end of the month, 790 had been delivered. The difference between actual deliveries and the contract standing for delivery at the start of the month, and all these numbers added up, is now exactly the same as the shadow contracts. Basically put, no one is stupid enough to roll over the contract, and everyone is taking delivery. And that can only happen if, they're running out. They have to be running out. I can't make it any more clear than that. Now, I haven't touched gold yet because I was suffering from the fires that cannot be named, and the after effects of it. I still suffer from them, unfortunately. But it is slowly getting better, but it's extremely slow. This is going to take like 2 to 3 years to recover from. So I had to focus my attention on silver. However, during the month of October, I actually took a screenshot of gold every day as well. And we can see here, well, it should be obvious. This is, well, the gold contract is smaller, 100 ounces versus 5,000 ounces for silver. So you need to make a contract sooner if you want more ounces. And clearly, just going by the numbers, well, we can say there's quite a bit of demand, isn't there? You add them all up during this entire month of October, and not supposedly non-active month, by the way, a supposedly non-active month with 30,000 contracts stand for delivery. Another thing that will be important in a moment. You add them all up, you get 4,390 contracts standing for an additional 439,000 ounces of gold, which at that time, at that closing price, which went down since then, I wonder why, was worth 824 million, basically. And the discrepancy almost lines up perfectly with the shadow contracts. So almost nobody rolled over the contracts in gold in October. So this is the 430,000 ounces number is one I can guarantee has been additionally delivered in October. So please remember that number of 4,390 contracts, additional contracts delivered over the entirety of October. And that allows me to go to the final week of November, where they made 5,198 in a week. So, if you're telling me that last week they delivered an additional 500,000 ounces of gold, but suddenly for December, the amount of contracts standing for delivery is almost as much as October in an active delivery month that used to be the most active month of the year, and now it's beat by a non-active month. Well, the week before this shit happened. You kidding me? This market is manipulated to all hell and back. I have no other conclusion for it. At some point, the price is just gonna pop because this has to end. They can't keep delivering all these extra contracts, all this extra gold, all this extra silver. It has to come from somewhere. So the world supply is just going to run out. I really think they've been whoever, well, the COMEX and the bullion banks and whatever, probably JP Morgan, because they own about 60% of all silver. So they might have something to do with it. And if they don't, they have been criminally negligent in reporting this, because they must know the data.
Well, we can't rule that out. I mean, they did get caught lying during that recent investigation. I believe they've, I don't want to besmirch them, although I believe Dave Kranzler's mentioned they got caught reporting inaccurate data to the COMEX. So it's like if JP Morgan's not involved and they're watching this, they're probably like, oh, we got to get in on this one soon. But
Yeah.
um,
Well, I'm pretty sure they're causing it. And the COMEX's own stocks reports, by the way, say that the COMEX is not responsible for the accuracy of the report. It says it on the damn report.
I did see that. And like I said, the Fort Knox must be jealous of those fine officials over at the CME and the COMEX and say like, wow, we got to get some people like that on our staff. So
yeah. I said in my article, like, this is some high level shit. The person who did this, who executed this plan behind the scene, if there even was a plan, they just didn't just take the opportunity. They did a very good job. I enjoyed chasing this. This was a hard one to find. But yeah, you just can't hide the numbers, I'm afraid. I have just a few more screenshots because I wanted to give a shout out to a metal that is often neglected in all of this, which would be platinum. But I collected this screenshot in June 30th. And because I saw that it was happening in platinum as well, as you can see here, there's a discrepancy there of more than 100. I knew enough at that point to say, well, okay, if it's happening in gold and happening in silver and it happens one day in platinum, it's probably happening a lot. But the reason I wanted to include this is because it has a very interesting data point. Here is the actual stocks report of the COMEX on June 30th. And you can see here that the total registered is about 177,000 ounces. And the total eligible is 108,000 ounces. Fine, keep those numbers in mind. Because I made the same screenshot again recently. And we can see here that for November 17th, or activity date November 16th, registered had grown to 481,000 ounces, while eligible had only gone up to 140,000. So eligible went up from 100,000 to 140,000. Registered went up from 177,000 to 481. And I think this is what has truly happened to silver behind the scenes. Once they discount whatever bullshit number they have on the report for silver, this is the actual ratio of registered to eligible they're going to end up with. Because I did the same thing for platinum, or for palladium, even though palladium is a lot smaller, and the ratio is basically the same. I forgot which ratio I calculated specifically. I thought the amount of actual ounces they have in contracts. Oh yeah, now I remember. So a platinum contract is 50 ounces instead of 100. So if you divide the eligible number by 50 ounces, you get about 2,900 contracts. For January, because platinum apparently is behind a month, there's about 51,000 contracts open for open interest, not standing for delivery, but possibly available for delivery. So you start calculating that ratio, it's about a 5% ratio of actual eligible to contracts that they have. You could call that their tier one capital. Basically, they're over leveraged like a bank. You do that same calculation for palladium, and you end up with a 3% backed ratio, because palladium is even smaller, so nobody's paying attention to it. For silver, it's about 31%, and for gold, it's 36%. So they're still over levered, by the way. It's supposed to be 50% because there's supposed to be an equal amount of shorts to actual contracts. But once the eligible number gets discounted to its actual number, I think it's going to be extremely close, or well, extremely close, relatively close to the ratio of actual eligible platinum versus the amount of open interest in January. So that would mean they would have to do about a 90% discount for the ratio to line up with platinum and palladium, which is considerable. Now, lastly, I wanted to, well, not dive in, but handle what's happening right now, because the pattern has not ended. Here, I want to show you what's very important to what's happening today or what happened yesterday. And that is, again, June 30th in silver, when the biggest silver delivery wall hit this year. Of the 16,000 contracts plus, on the first day, 11,458 silver contracts delivered. It's very important that you understand that it happened on the first day of the delivery month of this contract. It doesn't matter in which month it in actuality happened. It's just the first day of this contract. Because when the same thing happened in December, which is fresh off the press, you can see that on the first day, they only delivered 1,000. Of the 9,000 contracts, which is the smallest delivery wall yet, which somebody beautifully put it today, there's no liquidity. The easiest contracts switch over on the first day. That has been happening all year except for February, because that was the old situation that they all delivered on the last day, and the new situation that the vast majority of which delivered on the first day. So now we have a new situation where about 1/9 of the total delivers on the first day. And I happened to see the monthly gold deliveries, which I discussed with Rob earlier today, Rob Keynes from Gold Silver Pros. And apparently they delivered 5,447 contracts in gold on the first day, and another 4,700 something on the second day. About 10,000 out of the 30,000 they need to deliver, which is another sea change. I mean, early in the year, they were able to deliver 32,000 contracts in gold on the first day. And now on the first 2 days, they can only deliver 1/3 of the total, 10,000 contracts. That's a pittance compared to the delivery walls we've seen so far. And it won't stop, because March silver will come again. The demand is not going to go down, especially not if the price keeps spiking like it does today. And there's just going to be even more demand, and the next delivery wall is just going to have to cough up even more actual physical metal, which gets put on the registered where it's safe and it cannot be declared force majeure on. So when the COMEX blows, it's going to blow and declare force majeure ineligible. That is going to disappear by whoever owns it now, and I don't know who. And apparently the COMEX doesn't even either. But the registered gold is basically, if you hold it, you own it. If you hold the warrant, you own the gold. And nobody else can do anything about it. COMEX is basically acting like a private vault company. It's still on the balance sheet because it happens to be in the right location in space-time, but it's not theirs. So we are standing, I believe, I mean, let's get another thing clear. I am not saying I am right. I have collected so much data that it's starting to become more and more likely by the day that I am indeed right, and this thing is going to blow by the end of December. But I don't absolutely believe that I am right. I am only asking that, please, the big names in the silver space who've been in this for much longer than I have, to just take a look at this data, take a look at the shadow contracts article on my website, just DesoGames.com, and just judge the research. I've done my best to adhere, but any scientist knows that research isn't good until it's been peer reviewed. So that is really all that I'm asking for. I'm not a talking head that says everything will be fine, go into real estate. I am merely asking for the people with more knowledge than me to peer review my research and tell me if I'm wrong. Find a way where I'm wrong. Find a way where this pattern is not in fact a pattern, where this is all just the extremely, extremely convenient series of events. So I don't hope I'm right, because if I'm right, a lot of people are going to suffer from this because nobody's prepared for it. So I still hope I'm wrong, but it's looking like I'm right.
Well, Kirian, I appreciate you going through all this research, sharing it with folks. Glad we got it recorded today. So I know there was a lot in here, but people can review that. And I know you're also active on Twitter. So can you mention one more time the way people can stay posted, or they do want to discuss what you're coming up with, how they can do that?
Oh, gladly. You can find me on Twitter, just at DesoGames.com, DESO games. And my website, DesoGames.com, which you've mentioned. You can find long form articles on my website. I wrote about 83,000 words in a month, 43,000 of which in 5 days, which is the Shadow Contracts article, basically completely from memory. And after that, I had to take a break from writing articles, obviously, but I have been spamming Twitter about Tether blowing up. So I'm very active. All my research, pretty much all my research is free. None of the research where I deal with emergencies, such as Tether blowing up the crypto space or COMEX blowing up gold, I have sold none of it. All of it's free. All of it's publicly available. If you want to get the quick notes version, although that's no such thing as that with me, just go through the media feed on my Twitter, because just about every thread that's important has a picture attached to it. So that'll get you through all the stuff. And,
Go ahead.
That's where you can find it.
Well, I appreciate that. And since it is the first day of December and we're celebrating a Silver December to remember, I have a 1 ounce silver talent coin.
Ooh.
1 talent of pure silver. So folks, if you go and share this interview link on Twitter, tag DesoGames, DESO Games, and Arcadia Economic without the S, since it wouldn't fit. We'll pick someone to send this nice ounce of silver to, and we'll be celebrating all month long here in December. Will be fun to see what happens with prices and with the COMEX. Kirian, as we've been talking, silver up at $1.40 now. So anyway, thanks for checking in. We'll look forward to staying posted and seeing how it all develops.
You want to end on one very fun picture? Because all of this is riding on doomsday demand. And I have one more that's just perfect. I call it the 4 horsemen of the financial apocalypse. You should never trust a parabolic curve. Here we have Tesla that will bring down the NASDAQ, which is famine because a lot of people will go hungry over it. We have Tether, which represents crypto and take down the crypto space. Has spread to all the altcoins representing pestilence. We have the Fed printing the dollar representing war, because there will be conflict when the dollar finally hyperinflates. And like I said, never trust the parabolic curve, and it's looking like it's going there. And finally, we have the COMEX representing gold and death, because it will kill the financial system when the COMEX blows. And this parabolic curve is the only one that will stay up.
Well, it will be fun to watch how it unfolds. So, Kirian, I thank you again for joining me today, and I think people will find this helpful.
It was my pleasure.
So that is today's episode. Hopefully any questions you've ever had about that COMEX delivery report have been answered. Interesting stuff. And again, one more time, this video was sponsored by Cancellation Gold. And to find out a little bit more about them, click on the video that is coming your way now.